Now, Ed Yardeni is president at Yardeni Research. He's with us now to take some questions. Ed, good to have you with us here back on the program. Prime Minister Modi will be meeting President Trump this week. Uh, you know, the general opinion before this budget has been that India is one of the most tariffed countries. Uh, in terms of high tariffs, import duties, etc. We've started to ease some of that in the 26 budget that was presented, the union budget which was presented. Do you think that'll dominate conversation when that meeting happens this week? What's your sense?
I think it'll be a very important issue that will be certainly raised by President Trump. President Trump wants reciprocal tariffs, so he's going to go around the world, country by country, that's important to the United States as a trading partner, and basically start to negotiate on what kind of tariff relationships other countries want to have with the United States. I think what Trump is really trying to do is get tariffs reduced across the board and negotiate America's importance to other countries to accomplish that. But of course, there'll be other issues, including, of course, China's role in the world and whether India, which side India wants to be on the Chinese side or the U.S. side. And I guess the answer is India would prefer to be on neither side, prefer to be on its own side. But Trump may put some pressure on Modi to align more with American interests.
Well, Mr. Yardeni, yeah, and I think India is going to try and figure exactly that out this week when the high-profile meeting happens between the two leaders, right? It's just ahead of Valentine's Day, so maybe I don't know. We're hoping there'll be some love in the air, but we'll find out. on tariffs, however, from an equity market standpoint, this is real. Earlier, it was a lot of rhetoric, it was brinksmanship, but now it's getting real because those reciprocal tariffs from China, they're coming in. I was reading that out earlier. It's on coal imports, LNG, so on and so forth. So it's becoming a reality.
Right.
At what point does it start hurting, U.S. equities in terms of sentiment? I was also looking at the future inflation projections, 1 year forward, inflation projections, and those projections are already surging.
Yeah. Well, I think in the next few weeks, next few months, we're going to get a little bit more clarity on how much of this is negotiation and how much of this is going to be retaliation. Clearly, it's in everybody's interest to lower tariffs and to have freer trade, and the United States wants to participate in that kind of process. But if instead we get retaliation and an escalation of tariffs, that would be very bad for the global economy. During Trump 1.0, the tariffs did, in fact, slow global economic growth. The advantage the U.S. has right now is the U.S. economy is very, very strong and certainly has a lot of economic clout vis-a-vis our trading partners. So I think there will be a lot of negotiations. I think there'll be a lot of ups and downs in this process. So I think what it means for the stock market in the United States is we're going to have choppy waters for a while. But I think by the second half of the year, some of these unknowns and uncertainties will be clarified. And I think on balance, I'm optimistic that the U.S. economy will be fine and that earnings will be fine and the market will go up along with earnings.
So positive on the U.S. markets, Ed, and I think you've made that point as well earlier. You expect the S&P 500 maybe pull back a little bit, but ultimately head to around 7,000. I think that's the point you made the last time around.
That's correct.
That's my view. What about the U.S. dollar? Going by the tariff implementation, going by the economic data that's coming out there, it's cooled off a little bit from the recent peak, but you believe that it's headed higher from here on, and you're sticking to that stance that the Fed will not be factoring in any more cuts, no more cuts from the Fed in this calendar year?
Yeah, I think there may be no more cuts this year. Maybe I'm currently in the none and done camp for 2025. I think the economy will continue to show enough resilience. I think on balance, all those employment numbers that came out on Friday, including lots of revisions, showed that the labor market doesn't really need lower interest rates. It's doing just fine without lower interest rates. So that should be a plus for the dollar. So should the relative strength of the U.S. economy compared to the rest of the world. And on a more immediate situation, higher tariffs do seem to push the dollar higher. But meanwhile, we've got gold at a record high. We've got Bitcoin relatively volatile. You know, the currency market isn't just foreign currencies, it's also gold, it's also Bitcoin. So there's a lot going on. But on balance, I think in terms of currencies, I think the US is going to continue to be strong, especially relative to commodity currencies.
All right, Ed, we'll leave it there. Thank you very much for joining us.
Thank
It's
you.
a pleasure, and look forward to our next chat. It's always